Hello everyone, Mike Arnold here, co-founder of Path Trading Partners along Bob Iacino. Tesla, another rather boring day. Really not much going on. Still 186.22 is the key low. Looks like we are running out of a bit of momentum. Show you what I'm watching for, looking for a correction. At some point, a correction at this point would be up. Doesn't mean bullish. It means watching for an opportunity to come up. There's still plenty of gaps. There's some overhead resistance. And we return to the rotation zone one way or the other eventually, just like we did back here into the rotation zone and then rotating back down. Things don't always just go straight down. So key area we'll be watching for. Let me switch over to a 4-hour chart. 4-hour chart. Here we go. Really, it's this 195.25 area. The rotation zone on the 4-hour chart is just below it. Okay, and it's been holding it really well. You can see last correction, sideways drift, held the 8. This was just a slight gap above it, but then a rapid fall away. This hit the high right there on that 4-hour bar. So giving it a bit of leeway above the 8 and the 12.5% retracement. And we've already hit that 12.5% retracement on this bar. So that's going to be a key high. We're going to be watching for a sustained move above there, especially a move above 195.25 and then a return to test that area and then a rotation back up. Then the key levels above that, if we get them, if we go to new lows, that's off. So I'm just saying if we start correcting intraday for anybody who is looking, maybe they've been short and now good stop levels, then on a rally up they re-add, or I don't know why, but if you're an aggressive, very aggressive long and looking to take an aggressive intraday trade or something, that would be a key level that you might want to consider. Again, this is not trading advice. This is educational purposes only to help people learn the concepts of these GAN levels, key chart patterns, and our rotation zone. So above 195.25, we'd then be watching for a return to about 200. 199.75 to 200. That's going to be a very key level of resistance. You see right across here. We opened, ran up, but then slammed down through it. This was the high. This was a little open, slight poke above it. That's going to be key. And we still have this complete unfilled gap to the closing basis, and that would be a natural 25% retracement. Many corrections are a natural 25% retracement, which takes us to near the upper end of the 4-hour rotation zone. And remember, this 4-hour rotation zone is going to keep coming in. So as these areas converge, which would be a full gap fill, upper end of the 4-hour rotation zone, and a 25% retracement, that would just be a healthy, normal correction for Tesla. And if you're looking to go short or add short options, then watching for a rotation back down. Or if you're some kind of aggressive long, that would be an area then to potentially take profits or aggressively move up your stop. Remember, the rotation zone is against this stock on a 4-hour basis. I mean, even on a 1-hour basis, you can see if this is getting more aggressive, but it's sort of pretty much drifted sideways besides the spike up. The spike up took you to the other side of the rotation zone on the 1-hour. So based off a 1-hour area, see here, we had the key support, this little ledge right here. Ledge becoming key resistance. So really the level based off a 1-hour chart we'd be watching is about 192.65 to give any indication of strength on an intraday basis. So those are your shorter term levels. We really focus on the daily levels for longer term. And you see even a return to that 25% level would just take you slightly above the declining 8 on the basis on the daily basis. So that would just be a return to the very bottom of the rotation zone, not anywhere even near the top of the rotation zone. Top of the rotation zone coming in at a full 50% retracement right now from this last swing down. So even just a return, which would still be in very bearish mode, and anything can happen with this stock, that would take it to 222. Now, as we covered last week, same levels lower, 177.20 area for the next push down. Based off this current swing right now, and then 168.19. Those are the two minor levels. The next major level, 160.80. You can also see we haven't gone to new lows, but if we do eke out slightly new lows, we don't really substantially sell off, we will get a nice RSI divergence, which means it is just running out of momentum. That's what what we have here for Tesla right now, and we'll talk to everyone soon. Bye for now.